this podcast. I'm here with Johannes. He is a prop trader with extensive background in trading. He's part of the Crypto Vol Pit chat, and he's been trading spreads as well as volatility. Johannes, how are you?
I'm fine, thank you very much. Finally, the year is over, and I couldn't be more happy to close down the year with a little bit of profit. It's been such an insane year with so many changes, not just in market environment, but also in strategy for me personally. So I'm very happy to get a couple of days off during the holidays. Yeah, well,
Yeah, totally.
I right. Um,
So,
I mean, how about you guys? To be very honest, I haven't traded vol for a long time. I had a short break during the middle of the year. And haven't really followed closely with regards to trading vol. No idea. I mean, there has been a lot of changes for you guys, for GVol as well, right? So how did you feel about the year? How did you experience it?
yeah, absolutely. I mean, obviously a lot of shocks with sort of
Hmm.
3AC, Luna, FTX. So I know you as also a spread trader. I know that we've touched
Mm,
on this before. That was sort of like your start in trading. Maybe we could start there. So we
mm,
maybe we could just do a kind of a brief background of your trading career,
mm-hmm.
sort of what types of
Sure.
instruments you were trading, and when did you get into crypto?
Okay, so this is, I mean, I'm all retail, right? I've never traded for an institution or never, yeah, well, I wouldn't say never, but my beginnings weren't definitely in the prop trading space or in bank space, right? I went to university, didn't really know what to do with my life, but I always had a I was a gamer kid, and I enjoyed just fiddling around with the stuff. And when I went to uni, there was a stock trading game that was promoted by a local newspaper, and I just checked it out and put everything into one stock. And 2 weeks later, I doubled up the account, right? And I thought, well, there, there are worse ways in life to make your money. Let's check this out, right? And I did a deep dive into technical analysis and the forums, and I was a total noob. I didn't know where to start. No one showed me the ropes, and yeah, back at this time, the retail forex was the name of the game. The FX trading, uh, even before MetaTrader, and I thought to give it a go. Right, I had a couple of bucks saved from working night shifts at the gas station, and I put it down and traded FX, right, with trend lines and indicators and stuff. And of course, nothing worked. I lost money day over day, but due to the fact that you could just trade $5,000 positions, it was never much money I lost. So
Hmm.
I kept going. And there was one uh, situation where I had a position and the chart just flatlined and did nothing. And I was trading on a very, very small time frame. I think it was 2 minutes or 3 minutes. And this wasn't really, special. So I just sat there. And then after 5 minutes, the chart still flatlined. And I just clicked out of the position and closed the position, right?
Hmm.
And after half an hour, the chart was still flatlining, and I didn't realize that I didn't have internet connection the entire game, right? The entire time, and still could close out the position. So I realized, okay, either you know I could execute client side, and somehow, I mean, in the end, now I know I just traded on a demo, right, and didn't trade real money, and that was just a bucket shop fleecing clients with the demo account, right? But this was my first discovery of what edge looks like, right? And I just kept going, and the account grew and grew and grew. And at a certain point, they just blocked me. I couldn't trade anymore, right?
What?
And I got in contact with them and told them, okay, what's going on? I cannot trade. And they were really angry, and they told me, you're cheating, right? This is not real trading. You're cheating. We're gonna close your account, and you're not allowed to trade with us anymore. I said,
Wow.
okay. I mean, I had a good run.
Wait, let's pause there because that's super interesting. I just want to touch on a couple things.
Yeah.
So,
Yeah.
you figured out that your broker is taking the other side of your trades.
No, it's just there was no money flow ever. They gave me a demo and labeled it as a live trading account, and I just wired the money there, because in back in the days when FX went really hot, there was A booking and B booking, right? You had all the big accounts in the A book, and you only hedged those trades, right? And the small fries, you left them in the B book. Because you knew that 90% of the traders are losing their entire account within the first three months, and they were just betting against that, right? Why would you hedge a $5,000 position? You take in the money and give him a demo account, and then you wait until the guy blows up. You don't need to hedge anything. You just keep the deposit, and that's it. That was the name of the game. That's also the reason why the leverage was so high in the beginning. I think you almost, it wasn't uncommon to trade on like one by 500 leverage, right? And the spreads back then were like 5 pips to 10 pips, gigantic spreads compared to today. So it was basically impossible to win against a bucket shop if you traded intraday on a momentum basis or so.
Wow,
right?
that's
and
fascinating. So
that was insane. And in the end, every one of those shops operated like this. So I mean, they blacklisted me. They paid me out, right?
That's good.
And then I tried with another broker. And there I was trading real money, but the latency of the backend was so insane that you basically could do the same. You had a chart of the 6E on the CME, right? The euro dollar futures.
Yep.
And you waited for FOMC and for a big move, and you had like 10 seconds of latency where you just could all in your entire account into a single move, right? And it took like 10 seconds for them to pick up the same direction and same move, and then you close the position and you were done for the day. And that's what I did basically every time there were economic news, right? After a couple of weeks, they picked up on it, they blocked me, they blacklisted me, and then I went to another broker and did the same story, right? Basically until I had no broker left.
So this is interesting. So their latency worked in your favor.
Yeah,
and then
exactly.
So you basically found trading edge because your broker was bad. And so you were able to capture that edge against your broker. Your broker figures it out. Essentially, the casino gets mad that you're counting the cards, so they want to kick you out. You still get paid out at least. Is that right?
Yeah.
So the beginning of your trading career is like a real trader in the sense that you found the real edge, but in the sense that it's different from kind of working for a prop firm in the sense that
I didn't have, I mean, my entire story is basically I was lucky at the right time with the right skill set. I mean, it's basically how life is, but if I didn't have the internet breakdown in the first place, I would have never figured that out.
Right.
And so I was smart enough to like scale up this issue, but of course I was not smart enough to realize that this all I'm doing is like scamming the scammers. It has nothing to do with I made this experience later when all of this dried up, right? Because I when you start out, I think I was 23 or something, right? I had no idea of anything, and then you suddenly sit there and you make a lot of money by exploiting some stuff that happens on the internet, right? And of course you say, okay, fuck university. Why is this guy in front is telling me that the market is efficient and I'm making more money a week than he makes during the entire month. So see you guys, I'm leaving, right? I got an internship at a Forex broker, which was also a bucket shop. And there I learned what a bucket shop really did, right? And I was a sales guy during the day, or customer success manager, how they called it, right? And I traded during the night, and I basically, I had double income. I was living the life. I thought it was only a matter of time that I'm gonna retire at 35, and that was my brief stint in the job economy, right? But of course, things didn't turn out that well. The bucket shop basically did an FTX, right? They touched the honeypot. They were so certain that the clients were gonna lose big and lose all the deposits because they had no edge. So they pre-spent the deposits.
Wow.
And then some guy showed up and told them, look guys, I have like, I don't know, $500,000. I wasn't involved in that account really, but it was big money and it just sat there, right? And they didn't realize that this guy doesn't trade, and suddenly this guy shows up and wants his money back, and they check the accounts and realize, shit, we don't have the money.
Wow.
And then they went broke, and we had the authorities raiding the office, so all that shit. You pick up the phone, you have an angry client there, and he's like, you guys lost all my money. What am I supposed to do, right? He was asking me, and he told me, you know what I'm gonna do? I visit you guys and I'm gonna shoot you all. And then you sit there in your office like, holy freaking fuck, what am I gonna do, right? And then I just packed my stuff and left.
Wow.
And that was my first stop in the trading industry. Right?
Yeah, that's fascinating. I didn't realize there was bucket shops that were so shady. So that's pretty interesting. You saw both sides of it. This is in the FX market. So did you continue to trade FX, or did you move on to another product after this?
I tried my hand on futures, Russell and S&P, and I was used to the setup that you have the leader chart on one side of the screen and the lagger chart on the other side of the screen, and I figured out, both were indices, both had different constituents, but somehow they do the same. So I was trying to play the lead lag game with a little bit less latency edge, right? That of course wasn't there because I didn't know anything, right? And I figured out, okay, perhaps the S&P is always going to be the leader, and the Russell is always going to be the laggard. And to be honest, I got my ass handed to me, right? I mean, there was no edge whatsoever. But I remember one trade where there was an iceberg order in the Russell futures, and the S&P just upticked. I don't know how many points. Really, it was a really extended move, and I was thinking, okay, why is the Russell not following?
Yeah.
And this was basically the first time I discovered like an iceberg order and how a real market, right? Not a bucket shop, but a real market, a two-sided auction actually works, right? So the guy was done. Suddenly, I was already long because I was betting on the Russell following the S&P, and the guys suddenly stopped selling, and the Russell rallied like 80 ticks or so, and
Wow.
I was really lucky that day. I made most of my losses back, and then a little bit. And 2 hours after market closed, the broker called me and congratulated me on the trade because he
Wow.
was afraid that he lost the account. And by the way, I'm gonna charge you 500 USD for the trading platform. And I'm like, okay, I've never ever in my life paid money for a trading platform, and this guy wants $500 from me. This must be a scam. And I closed the account, and that was it, right? I didn't really touch the real markets until, I think it was 2007 when I opened a small wealth management firm with a good friend of mine, and perfect timing. We opened 2007. I think we made 5% in the first year. 2008 it was like 8%, and I didn't even trade there. We had a signal provider, and which had a pretty good performance, and I was just a screen monkey, to execute the trades. And then 2009 came along. Clients called and told us, guys, you're doing pretty well, but I lost so much on my other accounts. I just wanna withdraw the money. And then we had to close down the firm. And at this point I was like, okay, shit. I probably overestimated myself quite a little bit, when all this trading stuff, when it comes to all this trading stuff. I don't know where I should go next, right? I have no options left. My first adventure in the trading industry is probably at an end, and I quit. I don't want to do this anymore, right? Then.
So this is in 2009 about?
This is 2009.
Okay,
right?
cool.
I mean, I opened I thought I'm gonna be an entrepreneur. I opened the company. I didn't survive 2 years because 2009.
Yeah, right.
Perhaps it would have gone differently if the timing wasn't so bad. But in the end, it was okay, right? A good friend took me under his wing and told me, I need someone, I need a sales guy, because I have an apparel agency. I'm a wholesaler for apparel. And I'm like, okay, shit. I mean, I don't know anything about this stuff, right? I'm a finance guy, and I'm proud to be a finance guy. Why would I, But in the end, I think after 2 or 3 months, money started to become tight, and I just needed something to do, right? And I started selling apparel, and it was okay. It was very exciting, when you're used to sitting in front of the screen for the entire day and you are alone. There are no phone calls, there are no colleagues, there's nothing. It's just you and the screen, and suddenly you have to approach people and sell them stuff. Right? That was a welcome change, and I did this quite a bit. I think almost 8 years, right? And in the end, I ended up managing an apparel store. right? So some of our contractors, or one of our contractors, had to close down one shop, and there was 1.5 years contract left with the franchisor, right? And we said, okay, we give it to us, we handle it, and Johannes is going to be in the store, and he's going to handle the entire adventure, right? And I was like, okay, I try. I don't know anything about. I never had a store, and honestly, I think I learned more about trading in those 1.5 years than when I opposed to when I just sat in front of the screen the entire day, because you have an inventory that you have to order 1 year in advance, right? So if you order in March, you get delivered in March 24, right? So because everything is pre-produced, right? And then in March, you realize, holy shit! I mean, last year those pinkish beanies looked so nice, but now I have 3 boxes full of pink beanies, and no one wants pink beanies. So you have a problem, right?
Yeah.
You have to you have inventory that you have to have to realize that you have to reorder hot sellers, right? So it's basically you have one-way flow, and you have to cover the one-way flow in order to make money. Then you have flow that's running against you because some items just don't sell. What are you gonna do with them? You mark them down, or you put them on inventory or into storage for next season and keep them, because the stream of merchandise never ends, and you have to sell out faster than you get delivered. And then all this, if you make a bad decision, or if you buying the wrong stuff, you cannot just click yourself out of a position. You sit on this position, and it's like you just cannot get rid of it. And when you cannot sell it, you cannot pay your bills. And when you cannot pay your bills, then game over.
Right. Totally.
So that helped me. Basically, that helped me a lot with cutting losses very, very early, because it's bad when you have a bad position that's running against you, but it's even worse when you know it and you cannot even get out of the position, right? But in the end, the contract ended in 2015, and I had to make a decision whether I want to continue in the apparel business or do something else. And for me, I just missed the mental challenge. There were hilarious discussions with the customers, and this all good fun, but in the end you are sick of talking shit about stuff you don't know anything about, right? So I did some research. I was on a break for 8 years. Market structure was different. I think I missed the entire payment for order flow discussion, the sub-pennying and stuff. And I really didn't know where to start, but I just put a little something on an interactive brokers account and clicked a few buttons, just to get back on track. And as it turned out, over the internet, I met a couple of people. One was trading stocks, and the other one was trading short-term interest rates at a prop shop. And I tried to trade stocks because in the beginning, they really have some extremely niche setups that you can only exploit with small money, right? For example, special dividends. You have a small cap that announces a special dividend, and then the gamblers chime in. They buy up the stock in order to get the special dividend. The rally is not sustained, and all you do is just you short the day before X date, and then you pay the special dividend. But since everyone is rushing for the exit at the same time, the stock dumps.
Oh,
and
that's interesting.
that's your
trade.
profit,
Yeah.
right?
So,
But you forget about doing that with like 5,000 shares, because if the stock is thick enough to absorb this kind of positions, then the other sharks are coming in, and that's you don't find the same setup anymore. So it's good for like a couple of hundred shares, and once you figured it out, you can pat yourself on the shoulder that you found something, but you cannot scale that because you reach capacity pretty early. And then I tried short-term interest rates, and this was a market that I immediately fell in love with because little volatility, so not the wild swings in the S&P, but make a tick or make 3 ticks, and that's considered to be volatile, or was considered to be volatile back when I started. But you can have your order in a euro-dollar back month for an entire day and sit on it and just watch it. Until someone comes in and just fills you, and then it could be that you're sitting on an order for like 2 days and nothing happens, because I was focusing not on the back month, on the front month where all the volume traded, but I was trading in those months that no one was really interested, right? But when someone came along, I was there, and I was the liquidity, right? And because there are so many expiration months, you can basically manage your risk by by juggling positions back and forth via calendar spread, for example. So you have like an order in a contract 3 years out. You get hit while you're leaning on an order in a contract 1 year out, but so you have like a 2-year spread, but the risk for you is too high. So you need to shorten the difference between maturities, and then you trade either the 3-year versus the 2-year, or the 1 year versus the 2 year. So it's basically you have unlimited iterations, and there's always something a little bit off. There's always a bit that's 1 tick too high that you can lean on, and it was really a relaxed way for me to trade. I wasn't immediately profitable, but after a while I got pretty consistent. But then came crypto, and this was like, I don't know, like you see something, and it sudden you just cannot believe how inefficient that is, and how easy it is to make money. And I was scared at first, because I was like, okay, you have seen all this stuff before, and all of that went pretty badly, and that's never gonna last. If you, we're talking about trading on BitMEX. This was my first account. I just had a couple of bucks there, and then you suddenly see 500,000 stale order in a futures contract. And in traditional finance, an order so big and so visible is never going to be filled. It's either front run or arbitraged against. But here you could sit, you could watch the perpetual going up and down, and the order was just sitting there, and no one was trading against it. So it's basically how I started is just clipping those tail orders with small size, just scalping, trying to be consistent and to wiggle myself into the market. And then my size got bigger and bigger and bigger, and I couldn't get out anymore, right? So I started to offset my positions in the perpetual, which creates a spread again. And, that's how I started trading spreads in crypto.
That's interesting. Let me pause there real quick because I see a few themes I want to recover on. So the decrementing bid and offer, or reading the tape on Russell versus S&P 500, you sort of see that type of trade with iceberg orders that you can trade against, and one product keeps going and the other one's stuck. And then in the Eurodollar market, you have sort of different ways to manage inventory across the curve. So now when we get to crypto, we have a combination of the two, where you'll have something in the futures market which has a big order that you can trade against or decrement against, and then you can hedge that in the perp, which is the liquid side, and all of a sudden now you're trading spread. So let's touch there, because spread trading in crypto is definitely a wild market. I mean, we've seen basis trades where you can just basically deposit Bitcoin in Derivs, sell the future, and collect 40% annualized, stuff like that.
Exactly. Yeah. I mean, to be very honest, I actually, the entire stale order thing, that's gone, right? There were way too many sophisticated players who are using order spreaders or market making algos to just exploit those. But I'm still quite surprised why this is not a topic that everyone is talking about, because when I met with a couple of prop shop traders, everyone told me, dude, focus on the spreads. There's never been a big trader who started outright and was successful. I was like, okay, makes sense. I mean, spreads are mean reverting. You can scale into positions. You can play with basis and carry, and somehow you can wiggle yourself out of a losing position, or you can cut down risk in a different way than just by clicking the button and puking.
Right.
And in crypto, I feel like more people know very sophisticated option strategies, and no one is talking about trading the curve, right? And this is probably also there is no rate market in crypto, right? And spread trading, you can trade oil spreads or egg spreads in the traditional finance, but this is very difficult, and you have to kind of know your way around the physical market. Right. So every prop trader or every retail trader who wants to get the way into spreads is focusing on the financials, either treasuries or short-term interest rates, or right now I think the SOFR futures are picking up in volume, right? Because SOFR is replacing the LIBOR and the Eurodollars quite a bit. So, and there's nothing in crypto, right? And I think the reason is because in crypto there is no lending market, no centralized interest rate. DeFi is, in my opinion, still an experiment than a reference rate, right, of some sort. So it's basically peer-to-peer lending or O2C lending. No one knows where the real lending rates are, and the rate is only about margin trading, right? Because you cannot collateralize a house or pick up a loan from MakerDAO to buy real estate or something like that. It's not connected to the real economy yet. So the The move in rate is only implied by how many people are trading on margin, and that's why I think no one really cares about the futures curve, and aside from carry traders, but if you look about the basis right now, there is no carry trade. The curve is flat, and I think in Bitcoin you pay more in commission than you receive in carry, right?
So there's a couple episodes I just want to touch on. So one of the good calls that you had made in our vol pit is basically the Ethereum sort of basis needing to flip into negative territory because we're switching to proof of stake. Therefore, Ethereum has a yield. So if you can basically buy Ethereum and stake it and earn a yield, and then put some collateral on Derivs and basically leverage up and short the future, well, you shouldn't be making yield on both sides. You should. So
that's what I thought. But if you look at Ethereum, I mean, June 23 is trading at a $4 premium. No one knows, right? So the thing is, you can when you trade this stuff, you have two choices basically. You, on the first hand, you have to decide whether you want to trade coin margin futures, which are a little bit more complex, or if you want to trade USD margin futures, right? And then you have to decide: do you want to trade them on a DV1 adjusted basis? Do you want to trade yield? So, or do you want to trade them on a term adjusted basis, right? Do you want to say, for example, you trade 1 3-month spread against 3 times the 1 month spread? That would be term adjusted. And it's like, I don't see any connection between different scenarios or macro wise and the curve, the movements in the curve. And as far as I'm concerned, and as far as my experience goes, the entire curve is only flow related, right? So there's unless you have an event like the merge where there is an airdrop that's supposed to be worth something, and the entire market decides upon, okay, the airdrop is going to be worth $20, so we discount the entire curve $20. There's no particular reason why the curve trades the way it trades. It's only there's one guy who needs to get out of a position or needs to hedge a certain options strategy, and he wants to do that in March, and he dumps like 50 million USD on the March, and suddenly the March trades $200 lower than the rest of the curve. And this is like it's basically a game of execution and a game of managing risk, right? If you do that right, if you then I think the futures curve is still one of the few fields in derivatives trading that has a lot of potential, and that still needs to be discovered, right?
That's a great point. And a lot of people look in traditional finance, just kind of jumping into the option market here for a second. So in traditional finance, a lot of people look at sort of gamma exposure in terms of moving the spot price or pinning the spot price. In crypto, I think it moves to spreads. So again, like crypto market cap is so much bigger than the options market cap. And the options business is siloed. So it's basically just Derivs. And so people who trade options and market make on Derivs, like you said, if they have a lot of March exposure, they're going to hedge with the March future. They could do the perpetual, but it's an imperfect hedge. And so that gamma exposure and the delta rebalancing are likely to move those spreads. So there's definitely sort of a relationship there that's really direct.
Right, exactly. I mean that when we're talking about the curve, we unfortunately must talk about Derivs almost exclusively, because due to the fact that they have so many expiration dates for options, they introduced a lot of futures expiration dates, right? And this is what makes trading on the curve worth it, because the more expiration dates you have, the more you can flip around your DV1s and your risk. You know, when you look at all the other futures exchanges, they have 2, maximum 3 expiration dates, right? And you, especially when you say, okay, you wanna trade into a butterfly or something, right? To really lock in your position when you cannot get out of something, right? Then you don't wanna deal with the perpetual, because the perpetual and the fixed maturity spreads, if you mix those, you always end up with some kind of, interest rate swap, either fixed receiver, floating receiver style of position. And I don't want to, you cannot really, or yes, you can, but most of the time it's just a leveraged calendar, because the funding does nothing. And then you have double short December, for example, and once you hedge in the back month, so you're basically trading a big ass December spread, right? So and I feel like a lot of, when you look at the futures market structure, most of the volume comes from cross exchange arbs, right? So the good thing about having a bit of an extended curve, even if the back month is illiquid. I mean, no one trades the September 23rd right now. It's just there, right? And there is one bid and one offer, and that's it. But over time, open interest is building up, and you as an exchange, you can keep your entire liquidity for you, because I don't need to hedge outside with another exchange when my order gets hit in a specific expiration month. I can just also hedge on the same exchange, which is more margin efficient, and which leverage is is cool sometimes, but and you can really go for it when the curve is really kicking, right? You shouldn't, but I don't need to need complicated settlement mechanisms for arbitrage between 3 different exchanges. And right, so I think, we'll see how the market is going to develop. Will we see a rate market, and how is the rate market going to develop, for example? Right now, everyone is keeping crypto in self-custody or in cold storage, right? And hedges with USD denominated futures contract to stay in the US dollar realm and to dumb down the volatility of Bitcoin, right? Why, or does it make sense to have euro denominated futures, so I can keep my crypto in synthetic euros, and those synthetic euros have a rate, just as the synthetic US dollar has a rate. So can I get to a rate market this way?
Yeah, right? That's a great point. Very
so can I trade euro-denominated futures versus US dollar-denominated futures 3 months out and hedge that position with FX forward?
Right. Absolutely.
Can I make it efficient this way? Because somehow we have to get started to think about the rate market, because rates is, if we don't get a rate market, I don't know how the entire industry can push forward, right? I mean,
Yeah, that's interesting.
okay, we can have a look at DeFi rates, or can have a look at, or could have a look at FTX lending and borrowing rates as a reference, but somehow we have to ARB rates against against traditional finance.
That's super interesting. Wow, that's insightful. So, Johannes, kind of just wrapping up here. When you're not trading, what do you like to do outside of work?
To be very honest, I mean, I'm sitting in front of the screen basically the entire day. And when there's really nothing to do, I recently got into, trading vintage bikes, which somehow, I love to ride a bicycle. I live in a city. I don't need a car. I do everything by bike. And I met a guy at a cafe who, well, told me that he loved my bike, and told me that he was collecting bikes, and I didn't even know that it was really a thing. And I started to look into it, and it's, I used to play a lot of video games when the market was slow and I had positions or orders to watch or watch Netflix, but I'm an old fart now. I'm 40 years old, so my back is cracking. I need to do something for my body. So I think at a certain point, I just wanted to do something with my hands, and I don't want to just blow out money. I just love to trade, when I can connect my hobby with trading. That's optimal for me, right? Aside from that, really, I mean, I've worked really, really hard to make trading a career, and I think for me the end goal is not like boats and hose money and stuff, but the game itself for me is a privilege, right? To just be there and do this every single day. So it's kind of like, it's difficult for me to really think about something else that is as fun as trading. I try, but I've read an interview with Tony Saliba where he said, in trading, he basically made every single of his dreams come true, but his private life is a disaster. And hey, here we go.
The
right?
trader's life, for sure.
That's it. So you have to sacrifice 100%.
Yeah. You gotta love trading because it's like an obsessive game, and you and I are obsessed with trading, and anyone who's not obsessed with trading, you will trade against them, basically. So.
Exactly.
Well, Johannes,
Okay.
thank you so much for coming on. I think it's so insightful to get an idea of trading the spreads, which is a under discussed topic. So it's great to have you on, and everyone who tuned in, thank you so much, and we'll catch you next time.
Perfect. Thanks for having me, Greg.
Absolutely.